We outlined for investors a growth at scale strategy and agenda that is driving results. In terms of the performance, you look at last fiscal year 18, we delivered 10% revenue growth and 17% growth in earnings per share. We reaffirmed FY19 guidance. We indicated that FY20 and 21 would be greater than 13% growth in EPS. And after that, we tempered the EPS growth rate to a 10% growth rate for long-term shareholder value creation. And so that's what we framed for our investors yesterday.
Okay, in the same context, I mean, here you are. I know you were an aggressive buyer of your stock. You've got so many drivers. I question the need to be able to do something like that. It's almost like what Jay Powell did with the Federal Reserve, where he just said, listen, we're going to be flying high for the next couple of years. Why bother to put a gun to your head like that?
Well, first of all, we continue to buy back our stock aggressively today. In fact, because we believe in the long-term growth agenda that we outlined for our investors yesterday. Now, over the last 4 months or so, I've met with 60 plus of our large long-term shareholders. And every one of them indicated that what they looked for was a prudent, reasonable guidance that allowed us long-term to continue to reinvest in the brand, invest in partner wage, and do the things we need to do to deliver a predictable, sustainable growth agenda for those investors.
Okay, see, let me give you the counter to you.
Yep.
All right, you're 3,600 stores in China. It's only 150 cities. I mean, you could go to the city number 200, would still be bigger than some cities that you have maybe 50 Starbucks in. You are now doing delivery. You're getting 2 to 3 times sales when you do delivery. You got to tell me that. I do not understand why you are so downbeat in terms of what you could be doing in the out years. It's unfathomable to me, Kevin.
Well, look, we put together the growth at scale agenda acknowledging 3 things. Number one, we are building off a base of approaching 30,000 stores around the world. We are currently opening a new store somewhere in the world every 4 hours. So we are bullish on the long-term growth of that store count. Now we're dealing with a very large number. I mean, last fiscal year we posted $24.7 billion in revenue. We're growing off of that base at in a significant rate with the guidance we've provided. Second, we acknowledge that we're adapting rapidly to shifts in consumer behavior, whether it's the embrace of the digital lifestyle, whether it's more amplifying the need state of convenience, or the desire for more personalized premium experiences. We're adapting to meet our customers where they are. And then third is the acknowledgement that the competitive landscape is changing. With the large and growing addressable market of coffee, coffee is one of the fastest growing beverage categories in the world. And so many people see that beverage category growing, and so there's new competitors. In the US, we see a lot of consolidation of those competitors, and in China, we're seeing more startups.